What if I told you that a South African couple, both recently retired, could potentially draw over 600,000 Rand per year in income and legally pay zero tax? Meet George and Tembi. Not their real names, of course. They're both 66 years old. They don't own yachts, they don't have hundreds of millions of rands offshore, and they definitely don't have a team of tax lawyers on the standby. What they do have is something far more powerful: a clear, structured plan built over time, designed to use every legal exemption, every smart strategy, and every tax-free opportunity available to South African retirees. It's a plan we've helped them build over the past decade, using retirement vehicles, discretionary investments, tax legislation, and timing. And today, I'm going to walk you through exactly how it works, step by step, so that you can apply the same thinking to your own retirement. Hi everyone, my name is Hardy Swart. I'm a certified financial planner and a director at Family Wealth Custodians. Over the past 15 years, I've worked with thousands of South African retirees to help them optimize their income, reduce their taxes, and live a more comfortable retirement. If that's something that resonates with you and something you care about, hit like, subscribe to our channel, and share with friends that might need more information about enhancing their retirement outcomes. Quick disclaimer: this video is for educational purposes only. It doesn't constitute personal financial advice. Please consult with a certified financial planner about your personal financial situation. We've created a community of South African retirees and pre-retirees just like you. It's called Act 2, the Retirement Community, a space where we share weekly tips, tools, and strategies to help you live well, plan well, and retire with confidence. If that's something that you might be interested in, you can find a link in the description below. Meet George and Tembi, age 66, newly retired. George was a mechanical engineer and Tembi ran a successful boutique business. After decades of hard work, they're ready for a slower pace: travel, time with their grandkids, gardening, and giving back. Here's what their financial picture looks like. So if we look at their assets, they both have an emergency fund of about 200,000 Rand, sitting in a high-interest unit trust fund. They both have discretionary investments of approximately 500,000 Rand each, conservatively invested in a highly regulated unit trust. They also each have a tax-free savings account of approximately R1 million built over the past decade. If we look at their retirement funds, George has a pension preservation fund of approximately 4 million Rand, and Tembi has a retirement annuity of 2 million Rand, in which he also contributed 3 million Rand as a disallowed contribution from the proceeds of the sale of a business. George also has a rental property, a flat in Johannesburg that brings in approximately 12,300 Rand per month in net rental income. Now, let's take a closer look at how George and Tembi actually earn their income in retirement. We're going to break it down step by step so that you can see exactly how they do it. According to Section 10(1)(I) of the Income Tax Act, any South African over the age of 65 may earn up to 34,500 Rand in interest income per year, completely tax-free. When structuring George and Tembi's portfolio, we ensured that their emergency fund and discretionary conservative unit trust would produce interest income that stays within the exemption limits. That gives them 34,500 Rand each, or over 69,000 Rand combined, 100% tax-free. South African tax law allows for an annual capital gains exclusion of 40,000 Rand per person. That's Section 10(1)(c)(g). Each year, George and Tembi withdraws a portion of their discretionary investment, carefully structured to realize no more than 40,000 Rand in capital gains each. That's another 80,000 Rand in total, added to their income with no tax obligation. Over the past 10 years, George and Tembi have made disciplined contributions to their respective tax-free savings accounts. Thanks to consistent investing and strong market performance, each of their accounts has grown to approximately R1 million. Now, in retirement, they can each withdraw 50,000 Rand per year, and because of the tax-free savings are completely tax exempt, there's no income tax, no capital gains tax, and no dividend tax. No tax, no admin, no question. Here's where things get really interesting. When Tembi sold her business, she made a 3 million Rand lump sum contribution to a retirement annuity. But since she exceeded her annual deduction limit, those contributions were not allowed as a tax deduction at that specific time. But now, under Section 10C of the Income Tax Act, she is entitled to withdraw that amount tax-free from a living annuity. Her current living annuity is worth more than 5 million Rand, of which 3 million Rand qualifies as disallowed contributions. By limiting her income drawdown to approximately 203,000 Rand per year, she can withdraw that amount completely tax-free for 14 years. Most retirees and many advisors don't realize how powerful this section of the law is. If you'd like to learn more about disallowed contributions, we've created a dedicated video on the impact of disallowed contributions and how it can be beneficial in your portfolio. You'll find a link in the description below. George owns a flat in Johannesburg that earns him approximately 148,000 Rand per year in net rental income. Now, rental income is fully taxable, but here's the critical point. George is over 65, which means he qualifies for the senior citizen tax threshold of 148,217 Rand for the 2025-2026 tax year. Because his only taxable income is the 148,000 Rand rental for the year, and all his other income sources fall under exemptions or are tax-free, like tax-free savings accounts, interest and capital gains, the total taxable income remains below the threshold. That means George pays zero income tax, even on his rental income. So what's the bottom line? George and Tembi draw a combined 600,000 Rand per year in income. They live well, they enjoy life, and because of careful planning, they do it without paying a single Rand in income tax. Coming up next, we'll summarize their full income plan and show you exactly why it works so effectively. So here's how they draw 600,000 Rand per year tax-free by combining exemptions and smart timing. So if we look at their income source, first we're looking at interest. So since they're earning interest within the allowable exemptions of 34,500 Rand, that means George and Tembi can both earn that amount. That gives us a combined amount of 69,000 Rand per year in interest income, totally tax-free. If we look at capital gains, since we're strategically withdrawing from their discretionary investment and only limiting the withdrawal amount so that they don't trigger more than 40,000 Rand in capital gains each year, that means they each can earn additional 40,000 Rand per year in capital gains income or capital gains, which gives us a combined amount of about 80,000 Rand, again without paying a single cent on tax. Then, if we look at tax-free savings account withdrawals, since we are withdrawing 50,000 Rand a year from their respective tax-free savings account, that gives us an additional 100,000 Rand per year, completely tax-free. And then, if we look at the disallowed contribution in Tembi's retirement annuity that we converted to a living annuity, she can withdraw an additional 203,000 Rand as a disallowed contribution from a living annuity for approximately 14 years without paying tax on that specific withdrawal. And then coming back to George, if we look at the rental income that he's earning, since that will be the only taxable income that George earns for the year, that means the full 148,000 Rand that he approximately earns will fall under the taxable threshold for an individual over the age of 65, which also means he won't pay any tax on that amount. If we equate that all together, we can see that George earns 272,500 Rand a year tax-free and Tembi 327,500 Rand, which gives us a combined total of 600,000 Rand that they can earn together without paying tax. The key takeaway here is that tax-free doesn't necessarily mean low income. The magic here isn't about being wealthy. It's about knowing what's taxable, what's exempt, and what order to draw each source of income from. With this mix, George and Tembi can draw approximately 600,000 Rand per year, live comfortably, and legally pay no tax. Most people think that tax is just something that you endure in retirement. But with the right plan, backed by a solid understanding of the South African tax law, you can retire smarter and stronger. At Family Wealth Custodians, we help retirees structure their income so they can live well and leave well. Let us know in the comments, are you drawing an income in a tax smart way? Are you using interest exemptions, CGT allowance, or are you utilizing your tax-free savings account? I'd love to find out about what you're doing in your portfolio. There's one important thing to remember. Every person is unique. You have unique goals, unique aspiration, and a unique set of circumstances. So you might not be able to structure your portfolio to pay zero tax, but with effective planning, you might be able to still save a massive amount in unnecessary costs and taxes. I'm R. Swart, and this is the Family Wealth Channel. Let's make your retirement work for you and not for SARS. See you in the next video.